And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and welcome to the Market Forecast. Let's see how many ways I can screw this up. It's Tuesday, November the 16th. I'm John. Thanks for trusting me with your time. As always, we're focusing on context, risk management, and patience. Eco numbers, the busiest day of the week today for economic numbers, 7:30. The retail sales numbers came out. They were looking for 1.2% higher. It came out higher at 1.7%. The import-export numbers, imports are 1.2% more expensive. And 8:15 this morning, we have industrial production, 9 o'clock business inventories, and the housing market index. Stocks pretty much just steady prior to retail sales numbers. The question really is, how much of any rise in sales is due to inflation? Is it good news or isn't it? Do I know the year? Yes, 2021, 2022 in a couple of months. Biden and Xi have a call yesterday. I guess it lasted well over 3 hours, but really accomplished pretty much nothing. Lots of window dressing, but nothing really substantial coming from the numbers or from the conversation, from what I've been able to glean from what I've seen. Crude in rollover. I'm still on the December contract this morning. We'll be moving to the January contract tomorrow morning. Either the December or the January are fine to trade today. They're both, relatively liquid. I'm just choosing to wait until tomorrow to move to January. I'll move all the charts over so we have fresh information tomorrow morning for the market forecast. The IEA has hinted at a little bit better supply. Crude kind of shirking that information this morning. Of course, we're going to see that in the charts very shortly here. Walmart and Home Depot released earnings this morning, both of them beating expectations, as I think should probably well be expected. But as usual, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to the YouTube channel so you can get notification when we do go live. A brief look this morning at the VIX, up slightly at 16.73, still a very low number. Dollar index continues to creep higher and higher, 95.59 last I checked. About, 2-3 ticks off the all-time high, which was put in, I believe, in the overnight. 10-year yield keeps on creeping higher and higher, 1.62% this morning. And I got to say good morning to everybody as always. Good morning, Ron Kim, first in the room. You win the prize this morning. Frederico, Alfred, Theo, always a pleasure to see you, Theo. Sean, Shaw, Cunningham, good morning. Solid retail sales numbers for sure. Zerain, Charles, good morning, my brother Rick. Love you, brother. Andre, Kevin, George, Jerry is awake, and hopefully John is too. I think Mark was checking on if I'm awake by knowing the year. David, good morning. Ryan, Charles, Mark again, good morning. Charles, don't want to miss any insights? Well, hopefully we've got some good things for you for this morning. Good morning, Vince, Spencer, Dr. VJ, Brody, Brian, Rob T, and Greg. Good morning, Hogue. Seems like a good day to be patient in the ES. Outside till proven otherwise. Always good thoughts, Greg. I know you well, and you are quite the trade locator, if I will. Jacory, good morning. James, Isaac, Stephen, and I'm going to just kill that. I'm going to call you Kara. Good morning, Columbus. All right, so hail, the gang's all here. Here's the link for group coaching tomorrow morning. Justin, yo. 1 o'clock tomorrow afternoon, another episode of group coaching. As the market turns, will the S&Ps put in new highs? Will the Nasdaq just fly away? All this and more tomorrow in group coaching. Oh, good, Justin. First time watching this, inspired after the coaching session last night. Well, thanks for joining last night, and thanks for joining us today. Hopefully you'll find some hopefully, again, useful and important information. There's the link for tomorrow's group coaching again, and a little bit of information for you. Next week is Thanksgiving. We will have gold rolling over. We'll have natural gas rolling over. We will have treasuries rolling over, all in the first half of next week. Thursday, of course, markets will be largely closed. Make sure if you're going to be trading in the trading combine that you are flat when you need to be flat. Some abbreviated sessions. And we will not be presenting the forecast or the recap or the group coaching next week. We're going to be taking a little bit of time away from the markets. I will miss you all, of course, and I will miss the markets, but it's important to make sure you take a little bit of time away. And I'm going to be out of town for a better part of it, and visiting with some friends, and just having a happy Thanksgiving, I hope, and I hope you all do as well. Good morning, George. So again, next week, no forecast, no coaching, no recap, no coach's playbook. All going to be kind of kicking back, taking a little time off, and maybe catching up on some of the other things that we have to do. Good morning, dead letter opener. All right, so let's jump into the charts now without fooling around too much here. As always, we start with a daily in crude with no importance into the direction or the what am I looking for? No real importance to the order of the products that we look at. Just kind of going from left to right, and let's take a look. All right, so got butterflies today. All right. Just stay patient, dead letter opener. Stay patient. Okay, we're in rollover. At some point today, the volume will be greater in January. You're fine trading either one. Don't worry about it if you're trading January today or December today. Just keep trading it. I've chosen to leave December on because it still has a little bit higher volume. Tomorrow we'll be looking at the January contract. Look at where we are. Rollover range. This range actually started. We've been in this range for about a month, and we've got a very tight rollover range going here. So the hint of change in the midst of balance. Lost 4,300 in open interest yesterday on a push to the downside. Volume kind of falling off on this push to the downside. We've got an overlapping to higher range so far this morning. Taking a look at the 30-minute chart. Now, we do have the API numbers due out today. We have EIA tomorrow. We ended up with a late spike yesterday in crude oil. Now, we've been seeing lower highs and lower lows. This is a change to that. This late spike, which you can see right here on the chart, is at the end of the day, the market kind of leaves the early balance and then drives higher without the opportunity for the regular time frame traders to be able to accept or reject higher pricing. So when we open in or above the late spike on the next regular trading hour session, it can give us hints to acceptance or rejection of higher pricing. We've got about 4 minutes before the open here. We've got settlements here at 80.88. All of our overnight activity has been to the long side, so we may be holding some overnight longs, but this consolidation here can do a lot to reconcile some of those very short-term positions. We're going to be opening with a gap above the late spike indicates acceptance of higher pricing. It doesn't mean we can just jump in and buy it, as we found out yesterday in the S&Ps after the late spike did not necessarily hold at the base of the late spike, but held at the afternoon pullback low. Is there an afternoon pullback low in crude oil? If there was, I would have to say it's down here near last week's low, down around 79.80, and that would be a considerable pullback. Watch the opening range. We're going to see if we can catch the opening range here in the forecast. If the opening range is left at the low of the session, that's another signal that the market may be accepting higher prices, and we're going to want to look to go long as that opening range remains the low of the session. If we pull back, there's a couple of different levels for us to look for opportunities if we are of the frame of mind that we are looking to continue the upside move. The top of the late spike and the base of the late spike. I realize it's difficult to do that because you're gonna, if the top of the spike doesn't hold, it's going to create a small loss. But that's the idea, is looking to these levels so that we can manage risk. I'm okay with taking a small loss here. Maybe there's an opportunity at the base of the late spike, which is down here at 80.44-ish, that might provide another basing opportunity for a continuation to the long side. And if that doesn't work, then, well, we're just going to have to wait and see if we get an afternoon pullback down here, right down here near 79.70. None of these are guaranteed to work. Nothing is ever guaranteed to work. We don't know what's going to happen in any particular moment in these markets. And there's always the idea that there's potential for headline risks. Something comes out that jars the market. We know that we had some information this morning that's already out, already affecting the market. Industrial production left to here at 8:15, and business inventories and housing market index at 9 o'clock Central may also bring some new information to the marketplace. So we want to make sure that we are taking care of our risk. So we're looking for levels with which to lean on, that if it doesn't hold, okay, well, maybe this isn't the one, but we'll be patient and we'll look for the next opportunity to get into a trade. Crude oil coming back towards the gap close here as we get closer to the open. I'm going to move on to the S&Ps now, and we'll go back and watch the opening range in crude oil in just about 1 minute. So here's the S&Ps. What is our auctioneer doing? Our auctioneer had a very robust auction since, the low here, let's just call that October the 14th. We've had a lot of participants. We've had a lot of buyers jumping over each other to try and get this thing bought. And now our auctioneer is pandering. The auction has slowed to the upside. It's not broken. It's just slowed. The auctioneer is now talking up the idea that the S&Ps are probably going to continue to go higher. Whatever he's saying, he's just waiting for new information to come into the marketplace. If a new participant or existing participants come in to continue to buy this market, we're going to see it continue to move higher. If new business comes in and looks to sell this market, we may kind of head back to the downside. But again, nothing is guaranteed. The market is in a range-bound level, and as Greg was saying, seems like a good day to be patient in ES. Okay, we've got an inside range, extended trading hour range. There's not a big change in the perception of value. So to listen to Greg is saying there's probably not a huge opportunity early in the session in the S&Ps and in the Nasdaq. So we've got the crude oil opening. I'm going to run back to the crude oil for just a moment, and we'll pick things back up in the S&Ps just in about 1 minute here. So we do have a gap. The gap closes, let's see here, 80.94. Remember that, 80.94. So here's our 1 minute chart, and it's going to post. Here's the gap close, 80.94. It's going to post the opening range here as this first minute comes to a close. And when it breaks out the opening range, it can offer early opportunity. The market is opening with a gap, so it is opening somewhat out of balance, unlike the S&Ps this morning. Okay, so here is our opening range. 81.04 on the low side, 81.19 on the high side, and we're still inside of it. We have not broken out below it. 80.90 something was our gap close. Testing the low of the opening range right now. Still in it. Still not doing anything. If you remember yesterday, the opening range, we broke out below it, but we didn't spend much time down there. 80.94 is our gap close. How impressed are we with the price action below the opening range? Is there confidence in it? There we go. There's our gap close and back into range from yesterday. 2 days in, or 2 minutes in, we've got information. Here is our test to the late spike high. Any longs that were in this market have now since reconciled. Reconciling longs, long liquidation takes selling power away from the marketplace. This may be an interesting spot. Can't guarantee anything, just looking at it. All right, let's move on now, and we'll finish up with the S&Ps and get through the rest of these products. So, as we were mentioning, it's an inside day and extended trading hours. There's very little change to the perception of value of the S&P, and even after the information that came out this morning. We added 6,300 in an attempt to continue the move to the upside yesterday. That's kind of encouraging. Volume was a little bit lower in futures as well as in the New York Stock Exchange yesterday. Open interest is trending now to the upside. We've got 3 weeks to the rollover for equities and currencies. Take a look at the 30-minute chart. Here's yesterday. Here's our late spike. We opened above it, and we ended up at the afternoon pullback low for our low of the session yesterday. Very visual markets these are. What are we looking at this morning? We're not looking at much. No overnight inventory. Our overnight high and overnight low are relatively close to value high and value low from yesterday. We're going to be opening pretty close to settlement. I'm going to be extremely patient today. If I get too involved too early, it's very easy to get chopped up. Now, we're still waiting for information. We're digesting information. And anytime we open in range and in value, it's suggesting better trade locations may come as the day goes on. And if I know Greg, he's going to find them. Nasdaq. All right. Same. Pandering auctioneer, short time frame controlled. That fact that we traded directly to the afternoon pullback low in the S&Ps, short time frame. short time frame traders look to those for opportunity. Volume and open interest higher on overlapping to higher range. But again, this morning we're inside extended trading hour range. We don't really have a big change in the perception of value of the Nasdaq. Take a look at the 30-minute chart. All right. Same. Just hovering around settlement, which, by the way, is 1866.60. In the S&P's settlement is 46.79 even, if you want to put those on your charts. We've been just kind of wandering and braiding ourselves around the settlement price here, inside range. Our range in the Nasdaq is even inside value from yesterday. The high volume nodes for the Nasdaq from yesterday, certainly the point of control, which is 16,169. This little high volume node up here, I'm finding somewhat interesting and visual, 16,230. And then a little bit of a high volume node down here, just below the low of value at, let's call it 16,137. But inside of this, I'm going to be looking to find the extremes of the early session and then work those extremes for the good trade locations. I mean, anything in the middle here is a coin flip. So stay patient today in the Nasdaq and in the S&Ps. Take a look at gold now. All right, so we were looking at the whole moving averages on this daily chart yesterday, wondering if we were going to see a slowing of momentum in this upside move here in gold, and we did see that yesterday. It's still maintaining one time framing structure, however. Yesterday's low was above the previous day's low, and the high was above the previous day's high. We're still holding upside structure, one time framing structure. Even today, we've got a higher high and a higher low, at least so far. We're going to need some new business for this continuation to keep going. And there's plenty of it out there. Yesterday, we had pretty low volume, and we lost 500 in open interest. Now we're coming into rollover in gold. It's scheduled for next Tuesday. We're going to be moving to February gold. Watch, because I'm not going to be here. Watch volume. Watch the volume on Tuesday going into Wednesday as to whether we're going to see when you're going to see the volume roll over. It's never exact and it's never precise. So don't worry if you don't move over at that moment. Just make it the day on Tuesday, whichever month you're trading, and just stick with it until the following day and then move on to the February contract. You're going to have nat gas also rolling on the same day, treasuries also rolling on the same day. So just pay attention to the volume. Anyways, open interest was moot yesterday. Volume no big shakes yesterday. Just a kind of a day of rest, it seems. Taking a look at the 30-minute chart now. So the opening range was out of range, out of balance, left at the absolute high of the regular trading hour session. That opening range high was 1877.60. I did not respond to this because we knew we had information coming out at 7:30. The 7:20 to 7:21 open, again, the high is 1877.60. So now I'm going to be looking for opportunities as the day goes on. The market has driven back into range, back into value from yesterday, a very narrow range, and is currently seeking where the buyers will come back in and pick this thing up. Looking at the bigger picture, I mean, we do have higher highs, higher lows. It's holding structure. I'd like to see it hold yesterday's range low, but I don't get to choose that. I find it interesting that this kind of breakout that we were kind of looking at is currently holding support. This trend line. Okay, it's been run through and run over, but look where it trades to. Just basically the value low from yesterday. So I'm letting this market establish some early extremes, and I'm going to focus on those extremes as the day goes on. I've already missed a good part of the move from today. On to the final three. Euro. Big pile in and open interest, big continuation, one time framing lower. No reason to try and step in front of this market. Dollar keeps putting in new recent highs, downside acceleration, open interest and volume increased yesterday. This is a healthy downside auction. I'm not going to step in front of this. I've got a measured move as the weekly kickoff low here at 113.05. And I don't think I'm going to be looking at any opposite opportunities here until we get a chance to look at that level. We added 25,000 in open interest estimated yesterday on this move down. That's a pretty substantial number for the euro. Take a look at the 30-minute chart. Okay, we had a double distribution trend day. Opening outside of it, no chance for repair. We open outside of it. We just barely looked above the opening range, and then we started to move lower. So we have a gap. We have no attempt to close the gap. We've got some overnight shorts in this that are currently getting paid, and I do not want to step in front of this. So if I'm afraid I've missed the move, I'm going to have to have missed the move. I'm going to be patient and wait for an opportunity to present itself. Don't step in front of it. And whenever I say that, I usually put in the low. All right. Here's the 10-year. Rates continue to kind of creep higher and higher. Last week's low was supportive for yesterday. Was supportive on Friday, but we're taking our first look down below it and towards the weekly kickoff low. Rates again, 3-day range at risk. Obviously, we've broken out below that. When we're looking at range rules, we fade the extremes until there's an acceptance outside of it when we go with the move outside of the range. And it looks like this is one of those situations. Open interest continues to increase, adding 25,000 yesterday. Here's the 30-minute chart. So opening in range and in value, rejecting, bringing in volume, seeing some sellers here in cumulative delta. We're going to be looking to see if we can establish a day time frame range to look for the extremes to work with. I don't want to fight this move until we get an opportunity to test and see how it responds down around 130 even, which is the weekly kickoff low. We've been kind of cleaning up some of the naked points of control. We've just traded to and through one of the naked points of control that I like to leave on these because they are visuals for targets. And be patient. Be patient. One of the most fascinating markets for this morning is the natural gas because we have the potential to create an island low. You're not going to see this on the daily chart. You're going to see this on a 30-minute chart or a regular trading hour session only profile chart because there was a gap from here to the regular trading hour session here. And now we've created another gap away from this island. And if we can accept above weekly kickoff high here, which is $5.28, almost 29 cents, we're going to get into this gap. We're going to perhaps see a continuation to the upside and a potentially major reversal pattern here in the island bottom. We need the gap higher this morning to remain, and that's going to be critical for the creation of the island low. So here is the sitch. So there was a little bit of a gap here, at least we thought. So maybe not necessarily as strong an opportunity here, unless there's something screwy with the display on this chart, which these new charts have a tendency to do that. But here we go. No gap. Oh, this isn't the. This is the wrong chart. My goodness. Hello. This is great. This is good. Okay. So here's the gap that created the opportunity for the island low. Here is the gap that is creating the potential for the island low. We gapped to it. We ranged. We're gapping away from the previous session. And if we can accept back above this level and into this gap, I think we've got some pretty good potential upside in the nat gas. What we're looking at here is we had a late spike yesterday. Okay, here's that late spike. We're opening above the late spike. We know we've got some overnight longs. Settlement is 50.017. I mean, sorry, $5.01, almost 2 cents. We're testing back to and taking out a previous unchecked point of control. We hold above that. If we continue to see buyers coming into this market, it could create a pretty strong potential reversal pattern in that island bottom. I'm so excited about it. All right. So, managed to get through the forecast this morning without any gremlins. James, yes, please join the group session. Yeah, it's we talked yesterday about the difference between trading on a random sim account and then getting into the trading combine and then getting to step 2 and then getting into a funded account. Every step you take, it's a little bit more heat and it's a little bit more difficult to make the same trading decisions, the same things that you would do, and if it didn't matter as much. It's the fact that you got that skin in the game that makes it more difficult. Gap is measured from previous day high or low. Is it measured from the previous value high? It's measured from the regular trading hour high and low. Any way to tell if trend or range day from that consolidation in NQ? The consolidation is, we're not going to know if a trend is going to develop from that until there's an acceptance outside of the current range in the Nasdaq. So that we can't really tell the way the equities go. It's probably a decent probability of a move to the upside, unless, of course, there's some bad news. Yes, there are some different views as to what a gap is. Like a settlement gap is moving away from settlement. We'd call that overnight inventory. But when I'm looking at gaps, I'm looking at the previous day session, regular trading hour session. If we open outside of it, that creates a gap. Huh. Okay. Yes, there is a coach's playbook today, Robert, and the subject is kind of ending up the year, trading during the holidays, and just a kind of an overview of what we do at the end of the year. I've been talking about each week has kind of been a chapter in the book of this year's trading, and it's a little bit of a review, a little bit of continual learning, and anyone know about congressional trading? Apparently, it's legal to have insider information in Congress. Would you consider doing YM as well? Tova, we've got two of our equity indices in the S&Ps and in the Nasdaq, and yes, they are separate markets, and maybe it's something we could switch in and out. Maybe we look at YM sometimes and the Nasdaq sometimes. Might not like that, but I know, right? Robert, it's the holidays already. Unbelievable. And it's just flying by here. The good thing is, it's about 5 weeks until the shortest day of sunlight here in the northern hemisphere. December 21st, the shortest day, and then the days start getting longer again. So we have that to look forward to. Okay, so let's take our deep breath. Be humble, grateful, and creative in your trading today. Michael, I really like your idea. Do a compilation video with the clips of all these helpful streams and vids. Boy, that's going to be quite the project for our video guy. But I like the idea. Thank you for the suggestion. We've got a long trading day today. Take your time. We're going to miss trades. We're going to take trades that may not work out for us, but make sure they're in process. Stay patient. Always be looking for the trade locations that offer small risks, because you can take a few of those and you catch a good one and you're up money. So trade well, everyone. I'll see you in the pit, the metaphorical pit, in about 5 minutes. Have a great trading day. We'll see you for the market, for the Coach's Playbook. We'll see you then. Trade well.